If you're interested in making money, saving money, and investing your money, then this video is for you. I want to talk about hedges against inflation. Everybody is talking about inflation this year because governments are printing money. They're going into debt. They're devaluing their currencies in order to keep their countries afloat, their economies afloat, while economic activity is depressed. So people have been looking for places to put their money into, to invest it into, to protect themselves from the devaluation of currency. And that's why you've seen so many asset classes skyrocket this year. Stocks would be the one most people are familiar with, but so has a lot of real estate in many urban areas, as well as cryptocurrency. But that is not what this video is about. It's about farmland, which is a great hedge against inflation. As prices increase, food prices tend to increase with that, and that is why farmland is so key for this. Many United States billionaires have been quietly purchasing agricultural land across the United States for the past few years. And I'm going to tell you a few of these people, including Bill Gates, who has acquired 242,000 acres of farmland. Why is he doing it? And how you too can do this. While you're here watching my video, I would appreciate it if you just go ahead and subscribe to my channel and just tickle that like button. Let's just like this video. Let's help me get to 1,000 subs and spread the word, help people learn how to invest just like yourself. If you're curious what 242,000 acres of farmland is like, here's a picture of Central Park, Manhattan, which is a 10,000 square foot radius. Bill Gates owns 24 times this square footage in farmland. Simply saying to buy farmland as a hedge against inflation isn't the only reason why this might be a good asset class to look at right now. Other asset classes are flying high, like tech stocks. And some people, like Jim Rogers, thinks that you should go for the most hated asset class. He was partners with George Soros, a bit of a controversial investor, nonetheless a multi-billionaire. So he is quite this astute worldwide investor. And he says right now, United States tech stocks, especially around the world, are at an all-time high. And he likes to invest in hated asset classes. And farming right now is well priced. It's low priced. It's multi-generational low prices for farmland.
Apparently, every new investor in the U.S. right now is buying Apple.
Yeah.
In China, they're buying Tencent. They're buying all of these stocks. The new investors. It's not for me. I mean, it may double again, but not for me. I prefer to buy things that are cheap and hated.
As well as being a less popular asset class, there's other reasons why farmland could boom. And Jim Rogers explains why he thinks this trend where farms become more profitable could continue.
Very few people have gone into farming. The young people in America, the more they study, more of them study public relations than study agriculture. So the old guys are dying and retiring. No young people are coming in. So unless the price of agricultural goods goes up a lot, we're not going to have any farmers at any price. Something has to attract people into the agricultural business, and the only thing that will is higher profitability, and that means higher prices, whether we like it or not. So I cannot tell you how optimistic I am about agriculture going forward. The world's going to have a crisis sometime in the next few years because we don't have enough farmers.
So many people are making the bet that farmland is going to go up in value. The food prices are going to go up and push those prices up. But how have they performed in the past? You can see on this graph, Canadian and American farmland has been a steady return for the past 30 years. A $500,000 investment in U.S. farmland would now today be worth $3 million. Now we know that farmland can be an excellent investment and has the potential to continue to be a good investment. What does that mean for you? Great, these billionaires are buying this land. How does that help you do anything? One way you could go about this is get into farming entirely. And this video is way too short to get into that. But I want to give you a real life example of somebody that I know who was into farming. And they bought $1 million worth of land 30 years ago. Today, that land is worth $5 million. And they didn't come up with that money. They didn't have it in their hands when they bought it. They put a 10% down payment. They put $100,000 into it. So they put $100,000 on this farm. They took out a very modest income. They paid themselves $60,000 a year over this period, maybe a little bit less to start with as it grew into that. A modest income. They didn't make their fortune from working They made it as the land appreciated, as that initial investment of the $100,000 and pay down over time, paid off the land, got a 14% return annually, 14.5% return, making $100,000 turn into $5 million over a 30-year period. Now, some of you watching this video may say, I don't want to be in farming, but I'm interested in investing in farmland. I just want to do it passively. And I don't have $100,000 to start with. I can't go buy an entire farm and put a down payment on this massive mortgage. I don't want that responsibility. One of the other things you could do is buy a REIT, a real estate investment trust, a stock that purchases farmland. Here's an example, Farmland Partners. It sells on the New York Stock Exchange. And to keep it simple, they invest into farmland. And so you can have a fractional ownership in this company. And you can see the stock performance has been less than exciting as it went down over the last while. It has spiked in this last year. You can see almost doubled in a single year. And it's not a tech stock. And it pays a dividend. Another option would be the Gladstone Land Corporation. It pays a 3.4% dividend. That's ticker symbol LAND, and it trades on the NASDAQ. Neither of those stocks have had fantastic performances over the last 5 years, and I have no idea if they're great investments. I haven't done a dive into them, but that is one example of how you can put a small amount of money, $100 at a time, into farmland. Another way to do it, if you don't want to pick specific stocks and if you want to get broader diversification, is to buy an ETF. This is the VEGI, get it? It is the iShares Global Agriculture Producer ETF, and this is a bundle of worldwide stocks that aren't just owning farmland directly, but they own companies that are in the farm realm, whether it's processors, farm machinery, or the farmland. In the last year, this ETF appreciated by 18%, but in the last 5 years, it's returned about 5% annually. And for every $100 invested, you'll get $1.56 every single year in dividends. After looking at the graph of long-term returns from agricultural land and looking at the returns of those individual stocks and ETFs, it doesn't appear that those stocks had the same flat upward curve as actual values of land in Canada and the United States. So if you weren't interested in being a farmer yourself, if you're not interested in owning those stocks or ETFs because you feel they don't give you the correct returns that correlate with the land, if you do want to function more like these billionaires, you can look at owning individual lots yourself without actually being the farmer. You can create a passive income just like you would with a rental home, to the point where you even have a property manager finding your tenants. In this case, they would find farmers to rent the land from you. There's enough return where you could put a fractional down payment on the land and still have enough money coming in to cover the debt and maybe a few percentage points after that. So here's an example in Canada, and Saskatchewan is our middle province. It's in the center of the country, and it is some of the cheapest farmland in Canada and in the world right now. And they are producing a ton of food in Saskatchewan. And I did a quick search for lots that are 300 acres or more, and you can buy 300 acres in Saskatchewan for $250,000 to $300,000, $400,000. Essentially, if you got 300 acres for, let's say, $350,000 and you only had to come up with a 20% down payment, this may be an option for you to actually go buy individual plots yourself, find property management in those communities that are going to rent it for you, and still own the land directly as a passive investor. So there you have it. You don't have to like these billionaires, but we can certainly learn from them and their investment strategies to help us grow our own wealth. So what do you think? Is farmland a good play for you against inflation, or just a way to make money? Or are you going to be doing it with stocks or cryptocurrency? Let me know in the comments. Again, like the video, subscribe to the channel. See you soon.